Hi, hope you guys are good. Hope you guys had or are having a good weekend. Hope you guys also had a great trading week. And if not, the point of, you know, your weekends is to try and review the week. Go back into, the trades you took, try and get back into or study the decision making as well that you had taken within that space. Um, Try and find the inconsistencies and the errors and correct them and brush that off so that when you go into the next trading week, you avoid making those same mistakes. All right. The good thing about the market is no matter how skilled you are at it, there's always something to learn. All right. That's why we're always going back, we're refining our strategies, we looking into psychology, we're looking into our rules as well, right? To adjust to the things that we learn, right? So the reason for this video is to try and do exactly that. I'm going to be reviewing the trades I took during the week and just to give you guys perspective on, how I was thinking when it came to the market because trading is completely different from analyzing, all right? It's a different psychology. So what I'm going to give you guys is I'm gonna give you guys my risk management strategy. It's very easy. We're gonna associate that with psychology, and we're also gonna look at entries and confirmations. All right. So it's just three things. Under the strategy, we're gonna be looking at confirmations and entries. We're gonna be looking at risk management and psychology, in which I believe once you have those three things on lock, um, you on the right path to reaching consistency. All right. So let's get into it. So most of my analysis, some of them are basically higher time frame perspectives, right? Like for instance, on GBPUSD, although we're consolidating, I still see price wanting to come all the way down here to take these relatively equal lows. I still see a large amount of liquidity here, but that's my higher time frame perspective, right? It's not to say that although I'm seeing price having to go all the way down there, that I'm now entering an entry here and swinging it all the way down there. That's not the case. I am a day trader. All right. I just look at the higher time frame to get the higher time frames narrative, and then I move into the smaller time frame and I trade my M15, 1 hour M15, and I enter on 2 minute, 3 minute time frame. All right. So we'll be starting on Tuesday. I do not trade Mondays due to the fact that this is preference. I don't like analyzing on a Sunday. So I'd rather do it on a Monday. All right. That's just preference. That's all it is. So we'll be starting on Tuesday and we'll run through, my thought process when it came to this. All right. So of course on the daily time frame, we tapped into that order block over there. Price continued. We had this push lower. We took all these relatively equal lows here, right? And then market structure shift, we started to push to the upside, all right? So my thought process on Tuesday is we've taken these relatively equal highs. Oh man. All right, taking those buy stops on the 1 hour. And then after that, we get a market structure shift. Let me just zoom into that. All right, we get this market structure shift over here. And the response is, of course, a movement to the downside. Now, my thought process is this, right? I want to find out whether this is either a retracement or a reversal to continue the daily time frames objective, daily time frames narrative, which is bearish, right? So for me, I'm trying to find out, are we retracing or are we retracing to get a bullish move or are we reversing to continue the move lower, right? So I need to find out that information. I need to find the evidence for that, right? So I studied price action. I see the market structure shift occurs here after we take those buy stops, and then we have this order block, all right? 1 hour order block. This order block is very important, all right, due to this. I'll explain why. When it comes to the market moves by trying to find efficiency. It's always moving efficiently, or most of the time. That's what the market spaces is to try and seek efficiency, right? What I mean by that is this. Notice how here we deliver buy side, then sell side, buy side, sell side, and buy side. Although it's a bullish move, both ends are delivered. You have a buy side delivery and a sell side delivery. This is somewhat efficient market movement, right? However, in this instance, after formulating that order block, you get just black candles all the way down, only sell side delivery, which means that this price action over here is inefficient, in which that is also referred to as a liquidity void. There's an inefficient delivery of price here, in which if you have that inefficiency, you have a liquidity void, the market will eventually come and fill that to deliver it and provide efficiency, right? So already with that, I'm seeing the likelihood of price having to push all the way up here to at least reach this order block to fill this inefficiency, this liquidity void, right? So that's the first idea. That's it's somewhat giving me an idea that this may be a retracement for price having to continue higher, but I do need more information, right? So looking at this move, I'm seeing from this high to that low that price had tapped into this fair value gap, 1 hour fair value gap over, not the low, my goodness, 1 hour fair value gap over there, and there you have it. We rebalance that, right? So more reason for price to continue higher, right? And then the other thing as well is I was seeing this low over here and that low over there, relatively equal lows. We'll see it properly on the M15. I'm just going to delete this line so that we clear things up. And there you have it. Those are those relatively equal lows. And they are at discount prices, right? They are at discounts. So already see we have a liquidity void. We are in a 1 hour fair value gap. We've taken these relatively equal lows. So the likelihood of continuing higher, possibly there, right? Within this move, after we take these sell stops, I was seeing that price would most likely want to come to at least premium prices to take these buy stops. All right. After taking all of these sell stops, I had anticipated price to at least come to these buy stops. And that was my first objective to target. All right. And another thing, when it comes to trading, I do not trade Asian session. So this is Asian session from 6 p.m. to 12 a.m. This whole move is Asian session. This is a no trade area for me. Due to the fact that Asian session's responsibility is to basically accumulate, right? And if we're seeing an objective that's bullish, right? A bullish objective, what I then anticipate London session to do, this is London session, is to come and manipulate Asian's low, and which it does over there. London's responsibility is to manipulate Asian range, to set the low of the day, if you're going to be seeking bullish price action, to set the low of the day, right, and trade against that. So here you have it, it manipulates. ICT refers to this manipulation as the Judas swing. So it manipulates, and then there is where I then anticipate this being a strong low, it being a high resistance liquidity zone or liquidity low due to the fact that at this point, IBDA or these big institutions, that's the point they will be entering their order. They basically going to be order pairing, which essentially means this. They're going to be order pairing these sell stops with their buy order. Simplest terms is their stop losses and pending orders here that exist as liquidity, as sell side liquidity. They will now enter their buy order against these willing sellers. Hence, the market will continue higher. So they use that liquidity to buy, right? When it comes to trading, I only start trading at 1:30. Right. So at this point, I now look into entries. So we get this market structure shift over here. And my objective is I see this accumulation here. I move a time frame lower to the 5 minute to get a different understanding. All right, let me just delete that. Now, I was thinking if I'm going to be targeting these buy stops, my objective is to at least buy in discount to target those premium prices, right? So already I'm seeing what's in discount is these relatively equal lows, right? It's a discount PD array. Another thing as well is this order block over here, right? And the reason why this auto block is very powerful is, of course, you have fair value gap and stuff like that. The other thing is, after this, you just delivered bullish price action, right? Creating that inefficiency, in which I'd regard that as the liquidity void. And here there's an inefficient movement higher, so you'd anticipate price to continue lower into discount prices to fill that, right? And then only seek bullish price action. So I was waiting for this to occur. So sell stops get taken, but I'm not yet interested in taking the buy because you still have this much of an inefficiency, right? So I was just seeing this as more sell stops that would have to get taken. I decided to put a pinning order on that order block, have my SL on that high resistance low, and target 4%. So when it comes to my risk management, we'll go into that now. My risk management strategy is very simple. I risk 1% per trade and my target is 4%. All right. And when it comes to my daily target, my daily take profit is 4%, meaning when this take profit got hit, I was done trading for the day. My daily stop loss for the day is 2%, which means I only allow myself to take two trades. And if those two trades take an L, that means I'm done trading for the day. And it's that simple. So this was my first trade. You'll see that buy stops got taken. We continued higher. We filled the liquidity void. You could have been a seller at that point and then continue higher, right? So that was Tuesday's trade. And by the way, I had opened up a challenge account and that was my first trade. The first phase, take profit, was 8%. So I was 4% up, all right? So now we'll go on to Wednesday's trade. All right, let's just move the market over there. I only have 20 minutes to do this, so please bear with me. I am going to be moving quite fast. So I did post the analysis on my trading view that we had reached this premium PD array, being that 1 hour order block over there. We filled this massive inefficiency, so the reaction was lower. Right. I moved on to the M15 time frame, in which again I only considered taking trades at 1:30. I let Asian session play out. I'd seen that price had pulled back into this. We were still in discount, but I'd seen that price had pulled back into this M15 fair value gap over here. And yeah, and I had anticipated a reaction. Although I had seen that price would eventually come and take these buy stops, right? And had this post, and these were my 1 hour buy stops that I had wanted price to at least take as well. So my thought process was this, right? We filled this fair value gap. After doing that, we get a market structure shift over there. The draw is lower, all right? The draw would be to come and take out these relatively equal lows as sell stops over here, right? And the market, my anticipation was for that to occur and then price would come into premium, then I'd look for sell. But instead, it took only this low over here, right? It didn't take out the whole thing, in which I had just seen this as engineered liquidity, in which the objective was for price to come and take out these lows, right? So then my trading idea was I am going to take a risk entry off of this order block. Why specifically this order block? Can you see the delivery? Only sell side delivery. Therefore, we have it again, a liquidity void, right? We only delivered sell side after that market structure shift. So my entry was going to be, or was, a risk entry off of that. Risk meaning I'll just put a pinning order off of that. And if it were to happen that price continues higher to take the buy stops, I'd take a confirmation entry up there, right? So that was the entry, and I took sales. And of course, the 4R got hit, but my take profit was in fact 2R due to the fact that at this point, because I was 4% up, I risked 2%. All right. Then I step a bit higher. 2% is my maximum risk. I risked 2% on this trade and I targeted 2R, which when the take profit got hit, that was 4%, in which that allowed me to pass my first phase challenge. I hit the So within 2 days, I had accomplished that, but of course, the 4R got hit as well. So that is Wednesday's trade. All right. In fact, let's just move a bit faster, leave all of that. Like I said, I do have only 20 minutes to do this. I didn't take a trade on Thursday. I decided not to. In fact, I was not on my desk, but you can see that these buy stops got taken and there was a sell, right? After these buy stops, the daily fair value gap got, not the fair value gap, but the order block got retested. There is a sell over there. I'll not go through it because that one I did not take. And also this one, I'll go through Friday's one. I didn't take the second trade. I'll show you Friday's analysis so that things are much quicker. All right. This was Friday's analysis. My anticipation was to push higher to take, of course, this market structure shift. We had this order block there and that order block there. I was not going to take a risk entry off of this point. I was looking for a confirmation entry, being a market structure shift. There's a liquidity void there as well. We'll just run through that quickly. So we hit the, are we on Wednesday? Friday. So we hit the daily fair value gap. The move is lower, right? The reaction is low after that. We can see that we have this order block over here. Order block is important because right after that, we have this inefficient movement to the downside in which we have our liquidity void again, right? And we also have this order block up here as well, which is also powerful because of the fact that we have these relatively equal highs here that exist as engineered liquidity. We also have a bit of a liquidity void there as well. Asian session is this range over here. It accumulates. We take these buy stops. The objective was then to look for a market structure shift over here. So now we're looking at entries and confirmation entries, right? We wait for the order block to get filled. We move on to the 2-minute time frame. What I'm anticipating on the 2-minute time frame is a market structure shift, in which this is what a market structure shift is. It's a failure swing. The moment a swing fails, right, that low gets taken out. That is considered a market structure shift, and the objective is then to pull back into a fair value gap in which I will enter my trade. This is my confirmation entry. ICT teaches this in the 2022 mentorship, right? And as you can see, I did take this entry, but this trade eventually hit SL, right? So there you have it. SL gets hit. But now the second entry, of course, which is up there, which would be another confirmation entry. The second entry, I was unfortunately not able to take. I was not in my desk. It was quite unfortunate because this one did hit the take profit, being the 4R, right? So SL is 6.4 pips and the target is 4%. I'd like to emphasize again, I did not take this trade, unfortunately, due to the fact that I was not at my desk, right? But these things happen. But there you have it. So on my second phase, I'm basically 1% down due to the fact that I hit that L over there and I wasn't able to take this one, so I would have been 3% up. But of course, that's the end of the video. Guys, if you do have questions and whatnot, please do just leave them in the comments and I will make a video on it or I will respond to it. But of course, also go through these analysis and stuff like that I post on TradingView, especially this one. Um, and you'll see a large amount of analysis and stuff like that, higher time frame draws on DXY and GBPUSD as well. All right, I do have a few posts here as well. This is my high time frame draw on GBPUSD. I do have a DXY one as well. Okay, yeah. Just feel free to go through that. But with that being said, kind regards, the architect.